Sunday, 11 o'clock over here on my side. And what did we get? We got the bounce that we were waiting for. And so we're going to go at an intraday level. We're going to go down to the 5-minute level just to look at what exactly took place on Friday after what we talked about on Thursday, right? So on Thursday, on the 11th, we just had a nice slide down here. And if you took advantage of this little slide down, then, you know, kudos to you, and kudos to me, and kudos to whoever actually rode that drop. Now, on Friday, we got what we were expecting. We were expecting a bounce either off of this place or by hitting our target, right? And so what we instead got, we got a gap up. So we gapped up all the way to the 100 moving average, and we rode that 100 moving average, right? That 100 moving average became our resistance. And so something important that I spoke about in the last video is that our moving averages can work as a resistance or support. So in this case, the 100 moving average became our resistance. We grinded against it, and it kept pushing us down, pushing us down, pushing us down. Ultimately, we came to test down the previous day's lows, and instead we pivot up. We came down, we broke that low, and then we pivot again. Now, the interesting thing is here, as you're looking at this structure really play out, you could tell how the bulls are really putting the overtime to make sure that the destinations are not reached, because once you reach the destinations that we've kind of set out right here, then the whole story changes, and now we have a more bearish narrative instead of a bullish narrative. So going back to the 1 day, let's go back and look at the 1 day. So we had this wedge pattern. It broke out of that wedge pattern, and then we created this following. Now, for everybody that knows me, you know that one of the things that I'm pretty big on is what is the candle telling us. And so one of the things that the candle is telling us, obviously, is, again, we started up high, we came down low, and we closed right at that mid-level. So we closed above that 21 moving average, almost trying to make the case that we are still in a bullish pattern. Why do I say that? Because once we broke down in this area, well, what happened, right? The bears took control, and they took us all the way down, a little nice nosedive, which was the actual crash, right? And then once we pivot off of that low here, right? We pivot off of that low. Then we went up. We were trying to make a case for the bullish run, but we got rejected at the 21 moving average. Now what happens? We pulled back, and we just slingshotted up above the 21 moving average. And what happened? We gapped up above that 21 moving average. So what did we get? We started making the bullish case up, right? So where are we at now? So we broke down from this wedge, this rising wedge, and we're right below it. And so one of the things that the market likes to do is come and retest what was once support is now resistance. And so what we see happening here is that the bulls are trying to make a case that we are still in a bullish run. So let me delete everything off of here. So where do we go from here? So right now we are writing that 100 moving average, right? So the idea is that if we actually break down from the 200, at least at the 2-hour level, then we have a bearish case. But from an Elliott expectation here, we would expect this to actually jump and try to retest this area and try to fill in this gap. Now, if we're able to get above this gap, well, what do you know, right? We are on our merry way into, again, into our bullish trend up. But if we are not able to clear this area, I want to say by next week, then we are headed back even lower than where we're at before. And what happens once we go lower? Well, now if we start dropping, we're going to try to fill in this gap right here, which makes sense. Again, given the fact that we do have a resistance level at that 2950 that we pointed out in the last video, right? So 2951 is where we're kind of drawing the line here, but it's probably around 2950. But if we get into this area, the idea would be that we would actually bounce. Now, so this is the interesting thing, right? We talked about this in our last video, that the expectation is that we would actually come and test and bounce out of this area. And ultimately what we did on Friday is that we came close and we bounced up from not the 2950, but instead a little bit higher. We what held us was the 100 moving average, which is good. I mean, it still gives us sort of a bullish case here. However, it doesn't mean that we are done yet. Again, when the market finds a target, when it finds a magnet, it is pulled, it is drawn into that area. So what can happen is that we would actually see on Monday or Tuesday, right, a pullback, so that we could then fulfill what I like to call destiny and hit that target. And if we hit that target, then again, we're probably going to see another bounce up, and then we're going to have to then assess if we get held at the gap, or if we fill the gap and then we are rejected and drop back down. If we drop back down, again, as we talked about in the last video, we're going to have this 2792 or 2784 area where we're probably going to find some support and probably bounce from this area. And that's only if we actually come after this gap right here. Right? If we come after this gap, then again, we have a magnet down here that is calling us. And again, one of the reasons that I actually point this out is not only because from an Elliott wave, that is the expectation, but secondly, as you can see, we had a consolidation area in this area. So one, again, this area at the top becomes a support for us, right? At the top of this box that we just drew. And then once we enter this danger zone, if you will, this box area, then we're going to find some support at the bottom as well, and we'll probably bounce from that area. Now, if we break that second support, this area right here, then most likely we are headed even lower. And if we're headed lower, you can betcha that we are going to be retesting some of those previous gaps. And if we get there, then we'll assess accordingly once we get there. All right. So what's ahead of us right now? The expectation is again that we would actually move up. That's where the market will try to start rallying and try to start filling in those gaps. So we want to keep an eye for that. Now, if we see anything to the contrary of that, then let's remember that we do still have to contend with that. We still have that 2950 area, right? 2951, 2950, that, is acting like support. So we might find some support in that area. Now, if we actually blow right through that line, again, we have that 27 and that 2784 that I kept mentioning. Again, these areas are going to be acting as area of support. So, we want to keep an eye on that. We want to make sure that if we do jump into any trades, when I'm thinking about, jumping any trades, I want to make sure that I have clear confirmation. Now, as a conservative trader, that's one of the habits that I tend to form, that I want to make sure that I find confirmation. And this is why each candle is so important, that you actually know the story to the candle and understand what the candle is telling you. Now, sometimes it gets tricky because the market tends to have ups and downs and create these sort of monster little candles that are really not telling us much. But when you have a clear indicator, a clear confirmation where you have a good bottom, and you're not seeing any sort of bearish sort of formation, that's where you do want to, that's where I would personally myself would take some risk and say, okay, I want to jump in there. And it's what works best for you, what you've identified to be your sort of bottoming out trends or even your top trends, right? So, or your topping trends. So again, one of the areas that we want to look at, we want to keep an eye for that, still at 29.51, even though, again, the expectation is that we would move up and then come back down. We want to keep an eye on that, because ultimately what would happen is that on Monday or Tuesday, we would come into this 29.51 and then bounce up. Or, the market is going to push us even higher and try to make the case that we are still in a bullish trend. Now, mind you, I don't care what case the market makes. I just want to make sure that whatever the case is, I am on that train. So just to conclude, I'm going to put these lines up here where there are areas that we're going to come and try to test and try to break out. Now, if we break out of this area, again, this top sort of resistance area, it doesn't mean that we are going to continue our rally up. We will still have to contend with this island that is here at the top. But take note that if we do get across this second sort of this first resistance on the way up, we're going to want to fill that gap. That always becomes a solid trade that I try to take advantage of most of the time. That said, let's take a quick little tour of the MACD. The MACD, we got a crossover. Looks good. Seems like we're going towards the downside. The RSI seems to have pivoted, right? So we want to keep an eye on that. Again, there is that strong possibility that we're going to be moving higher starting when the futures market opens. So you might want to take a trip, again, to look at the futures. All right, let's take a look at the 3-hour, and then we'll go into the 3-day and then also the weekly. And it seems like we're trying to make our move up. We also see our MACD curving a little bit to the high side. So again, it seems like the expectation to move up is being supported by the MACD and the RSI. Again, anything can happen, but again, the possibility, the strong probability is that we are going to see a move up higher. Now the weekly, let's go to the weekly. All right, let's look at the 3-day. Well, the 3-day looks beautiful. We had a sort of reversal candle at the top, and again, we have that drop at the bottom. Now we've fallen on support. We've fallen on the 100 moving day average for the 3-day, which is great. Again, seems like, the story's sort of playing out, but we're getting weak on the MACD, and we're also headed lower towards the RSI. So from a larger perspective, from a weekly perspective, we may be looking at lower lows in the near future. All right, so let's look at that weekly. And the weekly. The weekly looks very interesting, by the way, okay? So this weekly looks like we have an engulfing sort of candle here. Now, what's interesting about it is, let's take a little closer look, is that we're not really eating the whole previous candle. We're just above it. And again, we can't make much out of it, because it may mean that the bulls are still not out of gas, although again the MACD is telling us that they're running a little bit weak there. But we don't try to make predictions. All right, we try to make observations. That is our job. We make observations, and based off of those observations, out of the facts, then we try to make probable or wiser decisions. In this case right now, the feeling here is that, yes, we are going to go downtown, okay? But we have to wait to see that confirmation, right? We have to see us actually break down this candle as well. So we'll see this week. From what it looks like, we have a sort of move up at the start of the week, and then we're going to start seeing either sideways action or a lower move down towards the end of the week. All right? So keep an eye on it, and let's stay profitable. All right. See you guys.